Welcome to Capital Currents, where the flow of business news and market trends keeps you ahead of the tide. I'm your watchdog, and today is Thursday, July 24th. Before we begin, I wanted to remind everyone we do have a daily newsletter delivered right to your inbox for this podcast, if that form of content is what you prefer. We just hit 1,000 subscribers for the Substack, and I can't thank the readers enough. The link is down below in the show notes. In today's episode, we recap the latest trade deal with Japan and why it may be a sign of more deals to come. And Elon's plans to spend billions of dollars on NVIDIA chips. I've got a great show for you today. Let's go. In the backdrop of the meme stock madness yesterday, we had a surprising trade update. President Trump announced a new trade deal with Japan and announced new tariff rates that'll be set at 15%, down 10% from the 25% that he threatened earlier this month. And as part of this deal, Japan is also pledging to invest $550 billion into the US and open their markets to more American exports, including cars, trucks, rice, matcha, and other agricultural products. So that was a major development yesterday, especially since Japan is one of the largest trading partners for the US. And I think it's a sign that more major trade deals are on the way. And we only got 8 days left in this month before the high tariff rates kick in, and I'm sure all sides are eager to get a deal done. Let's run through some headlines. We have more big banks jumping into the crypto hype train. This time, it's Goldman Sachs and BNY. These two big banks are teaming up to bring money market funds to the blockchain. According to CNBC, institutional investors will now be able to buy tokenized money market funds, meaning digital versions of one of the most boring but massive corners of finance. These tokens will trade on Goldman's blockchain platform, and BNY will offer them to their client. See, money market funds are basically super safe, short-term investments that pay interest. It's kind of like a high-yield savings account, but for institutional investors. It's a massive $7.1 trillion market, and now with tokenizations, these investments can now become more liquid, more flexible, and tradable 24/7. You don't have to wait for market hours to settle them. Instead of someone selling a money market fund to free up cash for a trade, you can just use the tokenized money market funds in the trade instead. It's way faster, it's way cleaner, it's modern. It's like upgrading from a fax machine to Slack. It just blows my mind seeing how archaic some of these financial systems are. Both BlackRock and Fidelity have agreed to buy into these digital funds, along with Goldman and BNY's asset management division. It's also worth noting that this comes right after Trump signed the Genius Act, which gave the green light for regulated stablecoins. The bill has created a lot of movement around blockchain adoption and traditional finance. In fact, BlackRock CEO Larry Fink even said that every stock, every bond, and every fund could end up being tokenized. So, if BlackRock is calling the future, then it might be a space worth watching. Let's shift gears and talk about Elon. According to the Wall Street Journal, xAI is trying to raise up to $12 billion to buy more NVIDIA GPUs for their next massive data center, and they're calling that Colossus 2. And this news comes just weeks after xAI raised $10 billion through stock and debt sales. Apparently, they've already burned through most of that money. xAI has been investing a lot of money in building out their AI infrastructure. They built the original Colossus data center in Memphis late last year, and they bought over 200,000 NVIDIA GPUs. But now they're trying to go even bigger. The company says they eventually want to get up to 1 million GPUs to power their AI chatbot, Grok. Now, xAI just launched Grok 4, which we talked about on last week's episode, which they claim beats ChatGPT on certain benchmarks. They also rolled out Grok 4 Heavy, which uses AI agents. But building all this infrastructure is coming at a huge cost. xAI is projected to burn through $13 billion in 2025 alone. That's why they're trying to raise more money. We'll have to see if this pays off, but Elon is calling in all the favors to raise this money. He's working with one of his longtime investors, Valor Equity Partners, and Valor is kicking in some cash themselves and working with private equity funds to secure the rest of the money in this deal. This deal is expected to close within a few weeks. We'll see if this gamble pays off because Grok is competing against big tech giants, and they have tons of resources. Google already has their cloud infrastructure, Meta is out here dropping billions of dollars on salaries, and OpenAI has the most popular AI app on the planet. So we'll see if Grok can make a dent here, but it is clear that Elon is sparing no expense when it comes to competing. That's all the business headlines I have for you. Let's take a look at some stocks making moves. Let's go back and talk about meme stocks. This time, Krispy Kreme and GoPro are on the latest shares to go skyrocketing this week as we enter into full-on meme stock mania. GoPro is up more than 80% this morning, and Krispy Kreme is up more than 30%. And just to reiterate, there are no news or deals pushing these stocks higher. It's all vibes and posts on Reddit. Retail buyers are jumping into options trading. Krispy Kreme saw over 100,000 call contracts traded on Tuesday, which is almost 75 times the average daily volume over the past 4 years. And GoPro also saw their highest call volume since 2021, with over 56,000 contracts traded. So it's definitely giving 2021 vibes when GameStop and AMC were doing it. But I feel like it's all happening at a faster pace this time. Like Opendoor, which started this meme stock cycle, but this time going from under $1 to over $3, and it's already losing steam and is down more than 40% from their highs on Monday. So all I'm saying is be careful out there. On the flip side, shares of Texas Instruments are taking a hit this morning after the company's third quarter forecast came in lower than expected. The company reported earnings, and their second quarter earnings were decent. Revenues were up 16%, profits were up 15%, both beating Wall Street estimates. But their guidance moving forward came in softer than expected. And the company is a key supplier of semiconductors to automotive and industrial uses, and they're expecting a slowdown there. As a result, the stock is down 10% in the aftermarket. On a side note, I need to see how Texas Instrument graphics calculator business is doing. I wonder if high school kids are still rocking the TI-84s like we did back in the day. I don't know if they're still doing that or just pushing everything to ChatGPT. If you're in high school or know someone in high school, let me know in the comments if graphic calculators are still a thing. The kids these days don't even know, but graphic calculators is how we kept ourselves entertained in class. That's all for today's show. Keep navigating those waters, and see you tomorrow.